opt on for hedge accounting, go for hedge accounting. Now, what is the principle behind hedge accounting? Basically, what it says is, because your intention is hedging, you are therefore allowed to smoothen out the impact of that hedge in your quarterly P&L according to the stated objective of the hedge. So instead of the quarterly P&L fluctuating in a volatile fashion, you have a control on how that P&L is distributed quarterly, and also the ability to adjust the hedging cost or benefit or whatever in a manner consistent with the hedging. Meaning, is the item a capital account item or a current account item? So the intent matters in hedge accounting. So hedge accounting is a tool you can use. Now, in hedge accounting, there are primarily two kinds of hedges, right? One is a cash flow hedge and there is a fair value hedge. Most of our hedging that we discuss in most of the companies is a cash flow hedge. What is a cash flow hedge? Any hedge which is meant to reduce the variability of cash flows is a cash flow hedge, right? For example, interest rate swap is a cash flow hedge. A forward contract is a cash flow hedge, because your forward contract meant for hedging dollar rupee export or an import is a cash flow hedge, and so on. So cash flow hedges are basically meant to reduce the variability of future cash flows, right? Similarly, a fair value hedge does happen in some companies. Not every company has to do this. For example, if you raise a bond in an NCD, right? You borrow money through a non-convertible debenture. Now, this NCD is a market instrument. It's not like a loan. It's a market instrument which has a market price attached to it. So an NCD obviously will make your P&L volatile quarter on quarter, because the price of the NCD changes quarter on quarter. And if you want to prevent that, you might want to convert that NCD into a fixed rate into a floating rate using a swap or something like that. So an instrument like a swap meant for hedging the fair value of an instrument like a bond, that hedge is a fair value hedge. In this session,